SpaceX IPO in the final stages before making its debut. And Leslie Picker joins us now from the floor of the trading floor of Morgan Stanley in New York City, the stabilizing agent and one of the big underwriters behind this major IPO. Leslie.
Hey, Andrew, now that SpaceX has officially priced its record-breaking IPO, bankers here at Morgan Stanley and Goldman Sachs and the other book runners are calling hundreds of investors and letting them know how much stock they'll receive out of what they requested. This process started last night. It continues into the morning until all of the orders are confirmed. It's a bullish sign for investors to receive these calls and be told that they're only getting a fraction of the shares that they had requested. This process, that's why many investors tend to inflate their indications of interest because they expect to get cut back. So even though I'm told this deal was 5 times oversubscribed, the actual demand will kind of be determined from this process. Advisors will get a clearer picture of demand once they get through these phone calls. But SpaceX won't start trading as soon as the so-called syndicate is broken. It will take hours and hours, and that's really where the stabilization agent comes in. In this case, it's Morgan Stanley. A key part of that job is making the market for SpaceX stock, pulling in the buy and the sell orders and studying them to determine what price it should open. If it opens too low, the stock could overshoot. If it opens too high and there's not enough support, it could fall. So the goal is to open with as little volatility as possible. Morgan Stanley traders here will be looking, essentially for enough volume to feel comfortable opening SpaceX shares, and that can take hours. So we'll probably not see a first trade until after lunchtime, guys.
I talked to a bunch of people last night, a lot of hand-wringing, lots of frustration from a number of firms that were trying to get allocations specifically for retail investors. This idea that they were going to allocate about 30% to retail looks like it's been cut back to at least 20%, if not lower. There were obviously a lot of big firms that had been vying for those shares, hoping to capture them on behalf of their clients. And the like. Do we have any real sense why they pulled back on that plan?
So I've been calling around and asking specifically why. I think some of it just has to do with the nature of what constitutes retail, what constitutes institutional investors. I was told, if you have an individual who's a billionaire, do they really, in their kind of investing through their family office, is that institutional, is that retail? So I think part of it just has to do with the overall categorization of this deal. If you recall, retail is kind of wide encompassing for SpaceX. So it includes those e-brokers. It includes, Robinhoods of the world and SoFis of the world. Obviously, that's been a really key contingency for Elon Musk. With Tesla over the years, he's had a strong retail following, at least through Tesla. So that was really important to him for this one as well. But it also encompasses a lot of the private banks for the underwriters that are attached to the underwriters, a lot of international retail as well. So my understanding is that just the delineation between what was constituted retail versus institutional kind of changed over the course of the roadshow. Additionally, they got some pretty significant institutional orders as well.